States back in '64 with Barry Goldwater.
Oh, I remember. No, I just kidding.
William, you don't remember?
I don't remember.
Wow.
No, a guy named William Miller.
Oh,
Yeah.
Huh.
I know
Good to see you, Mike.
Good to see you.
Yeah.
Take care. Nice to meet you.
Nice to meet you too.
Yes, sir.
Take care.
All right, man. I totally.
We'll do a commercial afterward. How's that?
Yeah.
with
Well, I
the
just
shell
realized I don't
shock,
have my
you gotta
glasses
go out
on,
and
so I
deal
can't
with
see
all
a
the-
thing. Do you have any like reader glasses?
Yeah, it is.
I cannot see a thing. Like literally. Well, I can see.
Yeah, I was going to. Oh, no, that was you.
It was
I get
me.
back to you.
This is a syndrome I
Okay,
have.
so they're not in. They're not.
Sometimes I have like 2 or 3 pair on, and then I have none. Kind of like
I should
pens.
keep a pair of extra just in case, but I don't. I think
Restaurants do that. They do.
That's smart.
Oh yeah. It's kind of like the jacket, you know. But
Okay, you
yeah.
remind me about this, and we'll have fun with it.
But I'd love to do that. I think I love this stuff.
Yeah, it's like that.
I don't think so, honestly.
No, really?
I swear to God,
Ah!
I can't.
Yeah, come up
That's
yeah,
so
no, come
crazy
up
that one
next
time I
week.
forgot my
It'll
glasses.
be decorated.
Oh well.
But, all the furniture.
The market's changing.
Yeah, so
That's
now
something I
she's
can talk
doing
about. Like it's
Okay,
not
good.
good.
Oh,
Like it's changing into like
All right, thanks,
more
Mike.
of
See
a
you later.
buyer's market. This is
Oh, wow.
different. I haven't seen this before.
my sister did that.
triptych.
Wow.
Yeah.
It's really
I
good.
know that.
It's very intricate
Yeah.
too. I mean, if you really
Yeah.
look at it,
The details I can
yeah,
see.
she's quite the artiste.
Does she live around here?
Working.
Oh, wow.
All right.
What's your brain, Patty?
Good. Well,
What's your brain?
oh yeah, so
Goodies.
market's changing for sure. I mean, I feel it. I'm right in the middle of it, and it's not. Is it an inventory problem? Is it a buyer demand issue? I mean, we have 74% less inventory than we did
Wow.
in 2012.
Okay, let's
Yeah.
get right into that.
It's
Great.
crazy.
Yeah, let's get into. I've got some stuff that will dovetail off that. I thought, if we needed more stuff, it's always nice to go back and talk about, like, you're a specialist and as a listing broker. What's the difference between? There's probably a lot of the public doesn't even really understand the difference between someone who specializes in being a buyer's representative versus maybe being a seller's representative.
Yeah.
That's good.
I mean, if we run out of things to talk about,
Yeah, but
on the
I
way
mean,
down,
I don't want to
I'm thinking
be
of
just. I don't want to like
okay,
say I
good.
don't do
All
buyers.
right, good. Well, I'm glad I
And
asked you
people
that.
get it. I mean, we pretty much do all of it.
Okay,
you know.
you do. All right, so
Which,
we'll stay away from that one then.
Okay, so the email questions we have from Mark. I'm experienced in investing in deeds of trust, but I'm now finding that my loans are getting paid off too quickly. What can I do?
Oh, interesting.
And for Patty, I'm in no hurry to sell my property, but I'm thinking about it. I want to start at a high price. Is that a good idea?
Good. Perfect. And also, just the whole idea of timing. It's never too early to engage a realtor. I mean, I've worked with people like literally 8 years before they sold.
Wow.
Oh wow. Okay.
Yeah.
Wow.
I know.
So that's a good point in that you're someone who, because people might be afraid to talk to someone like you, thinking that you're going to hound them endlessly about
Yeah.
putting their home on the market next month.
Yeah.
Right.
It's all about getting paid now, right? For a lot of people, but
True. That's a good point.
Yeah.
Yeah.
Okay, so just go ahead and throw out something like that. And I'll
Okay.
chime in.
I'm just looking
I've got
at
some
that.
goodies here that relate to a loan that we didn't do,
Okay.
a deal
that's
the week
good.
that we did not do. Similar to the story I think I told you the last week. No, we didn't do it. 2 weeks ago I talked about a price per square foot issue. We had another one of those pop up.
Oh.
Yeah,
Okay.
that I can talk
Do you want
about.
to start off with that?
No,
Let's start with,
let's talk.
okay.
Yeah, because
Yeah.
Patty's going to talk about the market changing, and I
Okay.
have market changing tech slowdown seen in San Francisco's commercial property market.
Oh,
It has to do
interesting.
with all of a sudden the tech companies aren't expanding as fast, so there's a little. And this is could be a leading indicator of a
Mhm.
slowdown in residential in the
Gotcha.
next 12 months. But it also leads into a loan we turned down because of the exact same fear. It was in Palo Alto. It was a 950 square foot home
That's what Rick told me
that
about.
the owner thought it was worth $2.2 million. He
Yeah.
wanted to borrow $500,000 in second position behind a $1.2 million loan. It would have been, but the appraisal came in light at 1.9
That's what Rick.
versus 2.2, 950 square feet.
Yeah, that's what Rick told me
in
about.
Palo Alto.
Palo
Piece
Alto.
of-
Yeah, and I
piece of crap.
took.
House.
I said
$20
$2,000 a square
over
foot.
$2,000 a
I said,
square foot.
I don't think so.
No, we turned it. I killed
Oh, good.
it.
I'm glad you
I said, I told Rick to call
Yeah,
a bunch of
that's
our guys down there and say if they like it, they can have it, but we're not recommending it.
Yeah.
Yeah.
Yeah, that's good. Yeah, that's scary stuff.
Yeah.
I had all these notes in the way, and I go back and print some stuff, but I pretty much know what's going on in the market.
Of
So,
course.
yeah,
Okay, you guys ready?
Yep.
All right.
that'll be important.
And away we go. Welcome. You're listening to the Best of Investing on Talk 910. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hoff of Pacific Private Money, one of California's fastest-growing mortgage investment firms, and Patti Cohn of Pacific Union International. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 vacations given away during the show. Those vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. Those vacations are free. Their only request, a $100 cleaning fee to cover the housekeeping expenses. Inflation happened here over the last 6 months. And
The
today's
cleaning ladies asked for a raise.
yeah, exactly. Yeah. And today's trivia theme is we did a James Bond theme a couple of weeks ago. This is going to be James Bond theme songs. We'll have some fun with that. Check us out on bestofinvesting.com. Also on television, Comcast Channel 26, AT&T Channel 99, Saturdays at noon, Sundays at 6 p.m. Patti, what is going on in the real estate market?
Oh, very interesting. We should be at the peak time of selling, and it's a very interesting market. If we stacked up a bunch of assertions and facts, it would be hard to understand what's going on. Meaning that for right now, it's April.
Yeah.
It should be extremely busy, and the last several years, this time of year, everything went off the shelves instantly with multiple offers.
Typical, wait for springtime, put your house on the market.
Exactly. And so when you look at one thing and you say, okay, we've got 76% less inventory right now than we have had in 2012.
Wait a minute. So
Seven.
3/4 less?
Yeah, inventory.
Wow.
And
it was bad 2 years ago.
It was bad 2 years ago. It just keeps going lower and lower and lower. So the question is, do we have a demand shortage or do we have an inventory shortage? Because on the other side of it, yet we still see, no, I shouldn't say still see, we're starting to see properties sit and not go right away. And we're seeing price reductions and we're seeing buyers make offers and just go, they don't get it for what they want it, they walk, or they're just tired and they're getting out of the market, they're sick of it.
So is the cause they got so tired of being outbid before?
Yeah.
That's not part of it? Okay.
Buyers are weary. They are very weary, and that often is the beginning of the signs.
Yeah.
And I see it because I'm right in the trenches, and I see it when offers are made and how they react and what they do.
Well, and the interest rates, did blip up a bit.
Right?
Right? And
Right.
then maybe they're thinking, this is the start of it. I don't know.
I wondered about that too. First I said, well, it's the rain. Well, rain's over. And some people say it's an election year. I can't really believe that because people still have babies and they still get divorced and they still move. I'm talking residential real estate here.
Yeah.
Mark, had some
Absolutely.
comments on commercial, but residential, it's you move because you're retiring or you're getting divorced or something. So we look at, and yet at the same time, the affordability index is up, so more people can afford to buy a house. Inventory is lower than ever because a lot of times it's just a supply and demand equation. So what's going on?
Yeah, we're not in a recession right now.
No.
Well, interesting enough, so inventory is low, and as a result, what we've seen for a several years now is double-digit appreciation in prices, and we all know that simply cannot continue on forever. Even though back before the last real estate crash in 2007, there was this, it's a new market, it's a new this, it's a new paradigm. They're not making any more land. Real estate will always go up, and of course it doesn't. The cycle is real. There is a business cycle. There's a real estate cycle. And what starts to happen as prices continue to go up, at some point in time, the affordability it disappears, and people stop reacting to sellers who want top dollar for their house. And
Right.
it's a natural phenomenon. Low inventory notwithstanding, they at some point buyers will start saying no.
Right. Well, we've already stopped double-digit inflation, appreciation, and so we started seeing that like maybe 16 months ago. And at the same time, yes, we have low inventory, and prices have gone up, but yet it's more affordable. So that tells you the wages are are up.
Yeah.
Interest rates haven't changed that much.
Well, especially if unemployment is low, then you have more people in the workforce who can afford.
Yeah.
Well, Patty, what I find interesting about this conversation is that, so, you're a leading agent in Marin County, one of the, hotter markets in the Bay Area, and what you're saying is, you're feeling it right now. You're feeling a change in the markets. The first thing you said when you walked in, before we went on live on the air, is that something's changed in the market. You're not really sure what it is because, let's face it, none of us have a crystal ball, and we just don't know. There's so many variables involved. But I brought last month. It's the end of it's the beginning of April, and at the end of every month, Case Shiller comes out with their index. Now, Case Shiller is a lagging indicator. So the numbers they came out with at the end of March reflect what happened in January of 2016. And listeners to the show know that we talk a lot about the Case-Shiller Index and have been talking about it for the last couple of years because it's one of the more widely followed national statistics, which also drill down like in the San Francisco Bay Area. So as of January of 2016, we were still seeing in the San Francisco Bay Area, among another 2 or 3 other markets in the U.S., 10% year-over-year inflation. It's not indicating, at least at that level, that index has not yet indicated a turn in the market. But what you're saying is you're seeing it now. And I'm also going to talk about a little later in the show about an article on the commercial side that also may be a leading indicator, not a lagging indicator, that maybe we're starting to see, the top of the market. And again, that doesn't mean that real estate is not a good investment today or tomorrow or next month. It's that you need to have smart information. You need to make smart decisions. And if you're making a decision based on, well, the market's hot, and if it's going to continue to go up because of lack of inventory, that might be a false assumption.
Mm-hmm. Well, another factoid is that 3/4 of Bay Area sales are multiple offers. So I don't mean to say, oh, it's a tough market, but buyers are very, very savvy and they know value. So those other quarter that don't, people will walk away. They won't do what I call stupid stuff. I mean, that's what we had at the end of last time and the last few years. People buying things just to get in, just to buy them for just fear that they were going to be priced out. Now people are saying, I'm not buying that property for this price. It's ridiculous. And then what sometimes happens too, pricing is what a seller thinks they can get. So as the rise up in prices start changing, some sellers continue sometimes pricing on that trajectory, and buyers just say, I'm not doing it anymore. I've been beat up, I've cried, I've lost, and I'm not doing it anymore. So there's both happening, so it's hard to really tell what exactly is going on. But I've seen this many times, and it signals a change.
Well, what's interesting is that, we know that, or at least we've talked about on the show in the past, how the San Francisco Bay Area on average has surpassed the last high in 2007. Well, Zillow just published a report last week that shows that now there are 11 major markets in the United States that have reached or surpassed their previous all-time high. Now, 2 of them are here in the Bay Area, the San Francisco market and the San Jose market. 4 of them, interestingly enough, are in Texas. Dallas, Houston, San Antonio, and Austin are all trading higher. So, again, this is an indicator that, okay, well, one of the things that we tend to believe as real estate investors is that, when you have a recession in real estate, that one thing you can count on is eventually you're going to reach the prior high again. And in every cycle, we pretty much, as long as we've been alive, it has surpassed the previous cycle. And it's funny because it just seems like yesterday, foreclosures and real estate was a bargain, right? There were foreclosures everywhere. It's 2012. You blink your eye, now it's 2016, and real estate hasn't been a bargain for a couple of years now, and yet it has been increasing, and we're all wondering, okay, well, how much longer is this rate of appreciation in real estate going to last? And it looks like maybe we're starting to see the peak of the horizon.
All right, we're going to cut to our first commercial break. Before we do, we're going to make a mention here for Afterguard 3-hour San Francisco Bay sailing. So they only take a maximum of 6 passengers, which means the boats are not crowded.
So great.
Isn't that cool?
Yeah.
Weekend daytime sales departure. It's either 9 a.m. or 1 p.m. or Thursday to Sunday evenings. You can choose a 5 p.m. departure for a 3-hour sparkling sunset SF Bay. The sunset sale includes a sparkling beverage and light snacks. Very cool. Call Afterguard at 510-535-1954 or email info@afterguard.net. Or just go to the website, www.afterguard.net. Okay, here is our first trivia question about James Bond themes. Who sang the theme song for the James Bond movie, The Living Daylights? The first caller with the correct answer is going to win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Who sang the theme song for the James Bond movie, The Living Daylights? Stay with us. You're listening to The Best of Investing. All right. Save the file. Yeah, so Mike is he's with the KKSF.
Oh, I was wondering about that. Yeah.
Nice
So he
guy.
sells
It's
airtime.
yeah,
Yeah.
exactly.
Yeah, those people, their Pilates has some serious regulars.
Yeah.
I call it go in there in the afternoon. There he is.
The same people. Yeah, I've never seen him there. Maybe that's why we recognize each other, because I go in there. I haven't been there in a while, but yeah.
He's already got a few friends there. It's a nice little place to
Yeah.
hang out.
They start early.
Pretty light, yeah.
Let's do on the next one. Let me start by let me jump into the deal of the not deal of the
Not
week.
good week.
Uh-huh.
Because then I can dovetail into this article, which I highlighted, which I'll more or less read from, but because it's really, really interesting, and I think it foretells, and we can continue to talk about residential real estate, because again, I'm not a big commercial real estate guy, and most listeners aren't either, but they do
Right.
care about residential real estate and the impact on their home values, as well as, they may be real estate investors.
Yeah.
All right. Okay. Have to announce the winner from last week. Trivia. Here we go. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hahn and Patti Cohen. Now, before we get into the James Bond question that we asked, last week we had a special trivia contest where the winner won a night stay at the Capitola Hotel, which is a boutique hotel which features free Wi-Fi and luxurious towels and linens, a mini fridge, ceiling fans, and organic bath products. And every morning in the lobby, you get a very nice continental breakfast. So you got to check them out at capitolahotel.com. or call 877-705-7377. I love Capitola.
I do too.
It's just a beautiful, it reminds me a lot of Carmel.
Yes.
Except a little nicer, I like it.
Yeah.
Okay, so last week we asked the question, where large sums of money are involved, it is advisable to trust nobody. Who said that? And it was none other than Agatha Christie. And our winner was Laurel from Walnut Creek.
Interesting.
Congratulations. Okay, so now, let's see what we got here. All right, so here's our trivia question we asked. Who sang the theme song for the James Bond movie, The Living Daylights? The Living Daylights. Anyone?
I don't
I don't remember.
Aha. Remember the group Aha?
know. Oh, yeah.
Oh, the 80s one-hit
The 80s
wonders.
No, yeah.
Or
Well,
two-hit wonders.
Two-hit wonders. Wow, that's a good song. Good group. I like that. Okay, so Mark, what is the non-deal of the week?
So we sometimes talk about Deal of the Week from Pacific Private Money, your local non-bank resource for fast, no-frills, fast real estate financing. We're kind of the plan B when plan A doesn't work, when your bank or mortgage broker says no. We more often than not say yes, but we, actually I shouldn't say more often than not. We do say yes a lot, but we also say no a lot because we have to be careful with our investor capital that we use to make our loans. And so I'm going to tell you a story, and it dovetails into the last segment where we talked about that maybe there are signs on the horizon that the residential real estate market might be due for a slowdown in appreciation. We might be seeing the top of the market. And so the story starts out with a phone call we got from someone who says, hey, I own a home. It's not my primary residence. It's investment property. It's a residential single-family residence in Palo Alto worth $2.2 million. I have a $1 million first, and I need to borrow $500,000 for business purposes. It turns out he's applying for credit for his business, and he needs to show more cash, so he actually wants to take out a private money loan to put cash in his bank account to show more liquidity. That may seem like an odd reason to borrow money from a private money lender like Pacific Private Money, but to be honest with you, that actually happens a lot. It's not unusual. People want to sweeten their, show more liquidity, so they borrow against equity and property they own.
So let the money season for a while.
So over the phone, it sounded like a great idea. Okay, well let's. And now this hadn't reached me yet at the broker level. This is one of my agents working on it. So okay, well let's go get a BPO on the property, a broker price opinion, which is a quickie version of an appraisal, and it's. And we like to use broker price opinions because sometimes I feel personally that a broker price opinion oftentimes will tell you a better sense of the value than, because he's, 2.2 million, Palo Alto, hot market, one of the hottest markets in the United States right now. So the broker price opinion valuation comes in, and it comes in at 1.9 million. Well, he wants to borrow 500 behind 1 million, that'd be 1.5 million. Well, if it's worth 2.2 and you do the math, that's 70% loan to value when you take $1 million first and a $500,000 second. $1.5 million divided by 2.2 million is 70%, and we loan up to 70% on cash out refinancing requests. Well, now it's coming in at $1.9 million, and it's closer to 80%. And we typically don't do 80% financing, but the guy's got good credit, and he's talking to my agent, Mike, in the office, and he's, please, I really need this money. And
well, if he said please.
So now Mike comes to me, and he brings with him the broker price opinion, and I'm looking at the report, and I'm looking at the house, and I look at the stats of the house, and get this, the house is 950 square feet.
And he says it's worth $2 million.
Well, I mean, but Palo Alto.
He said it was worth $2.2 million.
BPO came in
at 1.9.
That's $2,000 a
It's $2,000 a square foot. I get nervous at $1,000 a square foot.
Absolutely. That's ridiculous.
I mean, it's all about the lot, though. I mean, let's say there was no house on it. A lot could be 2.2 easy.
Well, we looked at
that's a good point.
So the first thing I do is I pull up Google Maps. I'm looking at the street. I'm going up and down the street, looking at all the other houses. And this is a very nondescript neighborhood, very plain Jane homes, built in the 40s. Wouldn't be worth more than $500,000 in most Bay Area markets, but because of its proximity to Google and Facebook and all the other multi-billion-dollar companies, it's getting that pricing. But here's the thing, and this is why one of the reasons I said no is I said lenders who were making these loans in 2005 and 6, those loans evaporated. I mean, when the market turned, that equity disappeared completely.
And so did the companies making the loans.
Yeah, it's right. The investors lost money. The brokers oftentimes lost their license or went out of business.
Yep.
And so I don't want to make a loan like that. I mean, you're talking about the greater fool theory here. The last guy to make that loan based on that valuation. I'm nervous, and I said this to my agent. I said, if something happens in tech, and there's a tech stock correction, any kind of correction, and all of a sudden demand for housing as a result of layoffs and other things that could happen in the employment in Silicon Valley. Those high valuations, super high valuations, they literally could disappear overnight.
I mean, even if you say it's still worth up $1,000 a foot, that's still underwater.
Right, exactly. So here is the article that also came out this week, and I made this decision before I even saw this article. This article is eye-opening for reasons that you're going to hear right now. San Francisco's commercial real estate may be foretelling a slowdown in the heated technology-driven economy, which is what we are here really in the Bay Area. A 5-year frenzy for San Francisco office space may be cooling as venture capital investments decline and tech firms slow their hiring from a breakneck pace. Office subleasing, often an early indicator of past downturns, is at its highest level
Oh.
since 2010.
Okay, so you
Wow.
So it's
have
already
companies-
happening right now.
Interesting, very interesting.
Right, so we're very early in the correction process, says this one individual. It's going to take several years to play out, and we don't know how deep it will be.
Oh,
So,
my-
so as an example, you have a company that had a lot of space, they were going crazy, successful. Suddenly, they've had a downturn themselves, so they've laid off a lot of people, and they have all this extra space, and that's where the subleasing comes
Yeah.
in.
Right, so it says here a lot of startups aren't doing as well as the money behind them would like them to do. So
Mhm.
they're cutting off the flow of funds for a number of these companies, they meaning the venture capitalists. Goes on to say, we're going to have a correction in the job market in San Francisco and Silicon Valley, for that matter, over the next several years. We had an economy that was growing based on the availability of capital rather than the fundamental performance of some of the companies.
Well-
When did we hear that last?
The
Yeah.
2000, the
Right.
year 2000 with the
Yeah.
.com to .bomb.
Right,
Yeah.
all of this crap, all of this news
Yeah.
about the unicorn this and unicorn that, and it's the biggest fallacy, and some very smart people are saying, I wouldn't put $1 into a unicorn company because they probably won't be unicorns if they even exist 5 years from now. So
Yeah.
So what does that have to do, what does this commercial market have to do with the residential real estate market? It has everything to
Everything.
do.
Yeah.
Sure.
The demand for Bay Area real estate and the appreciation we've enjoyed the last 5 years have been a result of riding the coattails of the tech
Yeah.
industry boom.
Yeah.
And if that looks like it may be cooling,
What
and I believe it is
What
cooling,
about all the cash buyers from China and other countries, though?
well, that's still, as much news as that gets, the Chinese cash buyers of real estate in California is still a very, very small
Small
percentage of total real estate sales in
Gotcha.
California on a monthly basis. So anyway, that's a little bit of news there, which I think is really, really important. So if you're a real estate investor, just know that. You cannot, if you're looking at a real estate investment strategy, do not assume that appreciation is going to continue indefinitely, because it looks like we may be at the cusp of another cycle in the coming
Wow.
12 to 24 months.
Okay, so I'll tell you what, we're going to cut to another commercial break. When we come back, we've got some very interesting emails for our hosts here about one for Patti that discusses about not being in a hurry to sell property and thinking about what price to set it at. And for Mark, someone who's experienced in deeds of trust, now finding the loans are getting paid off too quickly. Very interesting. Okay, our theme is James Bond. Who sang that? Who sang that song? Edward, right now. Okay. All right, here's a second trivia question. Who sang the theme song for A View to a Kill? The first caller with the correct answer will win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Who sang the theme song from the movie A View to a Kill? You notice I'm not singing it now. I don't want to give you any hints.
Yeah.
Stay with us. Best of Investing. We'll be right back.
So you go to Patty on the next one, right?
Sure.
Good. I hogged the last segment. But I just thought that was fascinating.
That is.
When I
It
saw
is.
that, it was like,
Nerve-wracking.
wow,
Yeah.
It
that's
is.
that is big news.
It is.
So what's going to happen then in like San Antonio and all that, where it's not necessarily tech, but it's at the high, like you mentioned?
Well, for years I've been hearing, for the last couple of years, I've been hearing a lot about, you got to go to Texas, you got
That's
to go
what
to
I'm
Texas. But I think it's too late to go to Texas based on, that information.
I think it is too.
Yeah.
Because when you hear that for a sustained period, it is too late. Because at the very end last time, it was all about you got to go to Vegas, you got to go to Florida,
Oh yeah.
and those two tanked the most.
Well,
Yeah.
it's funny because
And they've come back, of course. Everything.
although not, it says the two largest percent from the all-time high negative is, there were two here that were 30%. Orlando, Florida is still 30% under the high.
Wow.
And Las Vegas is 34% under the high. So, and again, these are like, blended numbers. So maybe some neighborhoods have recovered, but they're saying still, on average, Vegas and at least Orlando.
See, there you
That's
go.
about
See,
right.
Those were the two
look
where
at-
people said that's what you got to go to, and that's what they've been talking about with Texas. Stay
Yeah,
away from
right.
Texas.
I
Well, it's
know.
funny. The one part about
funny.
Texas, like the San Antonio, is I kind of like the idea of the lower end market where you're getting people who are like immigrants or whatever, but I mean they have Social Security numbers, tax returns, and all that, and it's like the first home, and if they're going to put $5,000 or $10,000 down, and it's only maybe even 10% of the deal, those kind of people, they're going to do everything they can not to lose that house,
Sure.
and then the rent is their mortgage is going to be cheaper than if they rent, and so
Yeah.
it's kind of potentially. I mean, we're not talking $300,000 houses. We're
Right.
talking about houses that are less than $100,000.
Right, that's a really good point, yeah.
A little different, but okay.
Except if they don't have a job and they have no money.
Yeah, but,
You know?
then how does it get them up to $5,000 or $10,000? Maybe if they lose their job.
Yeah.
Then I think those kind of people, they're going to get their family and everybody in it. They don't want to lose that.
Yeah.
I think typical. Okay, here we go. Welcome back to the Best of Investing. Edward Brown here, along with Mark Hahn and Patti Cohen. Second trivia question: who sang the theme song from the movie "A View to a Kill"?
First name Sam?
No.
No, that was that's I don't remember
What's
which
the name
one
of the
View to Kill is. I don't know.
A View to a Kill. Duran Duran.
Oh,
Remember
wow.
that?
Yeah.
I guess not.
Interesting.
No, that's the penguin from Batman. Okay, Patty, an email came in for you. It says, "I'm in no hurry to sell my property." Of course, I don't know why they're emailing us, but
It's like starting like that.
yeah, exactly. Okay, but I'm thinking about it, and I'm thinking about starting at a high price. Is that a good idea?
Yeah, that's a great question. And part of the question is, do I engage a realtor now, and should I put my house on now and wait for the market to catch up? Do not put your house on high because at a high price just to test the market,
Or when you're high.
or when you're high.
Don't do that too.
Do not put your house on high. Anyway, so do not do that because number one, nobody else is doing that, and especially in a market where there's low inventory, where the market can drive it up. In a market, the Bay Area, 3/4 of properties go with multiple offers, and I can show you the percentage over for 1, 2, 3, 4, 5, 6 offers. I have the stats on
Wow.
How much over it's going to go based on the number of offers. So
Interesting.
the lower you price it, the more offers you're going to get. The more offers you're going to get, the higher it's going to go over than what it would have.
Interesting. Okay.
So if you are the only one that's got your house high, all you're doing is fueling those other properties that are competition.
Oh, good point.
You're just helping them sell. And
Very good
meanwhile,
point.
you're literally devaluing your property. So in a seller's market where everything moves and you're the only one that doesn't, there becomes suspicion and fear about, why is that one not selling? What's wrong with it?
Yeah, because a decent broker will say, this price is just too high.
Yeah. And buyers are very educated.
Yeah.
And you can go on many sites, Zillow, Trulia, whatever, and see what the value is there. Don't count on that because they're often wrong, but you can buyers are educated. They can find out a lot. So you definitely don't want to do that. In a good market or a bad market, you just don't want to do that. Why sell your competition's house? And they say, well, I'm in no hurry, so I can wait 6 months. Well, you're 6 months later, when you're bloody on the floor and nobody wants your property, it's going to be worth even less.
Yeah,
So just wait 6 months.
Yeah, stale property doesn't.
No.
That's not good.
What's wrong with it? And then
Yeah.
really nothing's wrong with it. It's just the price.
Yeah.
And so part of the question is, even if you have an inkling of a thought to sell, should I, and you're not in a hurry, talk to a realtor now, because get that kind of feedback, and then maybe they could also, find somebody that doesn't want to buy until 6 months, but don't put it on. Like I do a lot of pocket listings,
Okay.
where it's not on the market yet, but I, network with other brokers.
Yeah.
I'm in a networking group where it's the top 10% of agents, and we're involved in 3 out of 5 transactions.
Wow.
Yeah,
That's
so
a lot.
it's not too early to engage a realtor. I've worked with people literally for 8 years before they actually bought or sold. Excuse me. Yeah.
Patty, you brought up a good point. I just want to clarify this for the audience. So, I would think that I might be afraid to call someone like you to get information about how to about my home, about listing it, about strategies, because I'm thinking that you're going to pressure me into putting it on the market next week, and I might not want to put it on the market until later on in the year or maybe next year. And you're saying it's okay for me to call you. You're not going to hound me about putting my house on the market.
Right, I'm definitely not. And I mean, there is a model of an agent that will hound you, and they'll just throw out the lead, and you'll never hear from them again. But I don't do that because I'm here now. I was here 25 years ago, I'm going to probably be here another 10 years from now. So it doesn't serve anybody, me or the seller, to put a property on at a high price.
Yeah.
And I can really, really add value by talking to them now about things they could do to their house that'll give them a return on investment of like 500%.
Wow.
You know, spend $5,000 now, it's going to give you $25,000 better in a purchase price. So these are the conversations we can have.
Guess putting a pool in is not one of those
Nope,
things.
not a pool. Nope.
Well, I haven't. So I want to talk about something else that you talked about. So, what if? So the question was, should I put the price high? And you gave some reasons as to why they should not consider doing that. What if you have a unique home in your neighborhood? And I'm speaking from experience. My wife and I just remodeled our house from top to bottom, and we're clearly the nicest home on the street. And in fact, I went to refinance my mortgage, and the appraisal, because of appraisals the way they are now, it came in quite a bit lower than what I think it should sell for because of its uniqueness, the unique way we remodeled it, the whole home automation, blah 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 blah. When you come across a home like that, where the comps are difficult, what kind of strategy would you do? I'm afraid, like, if I put my home on the market at a quote low price, lower than I want, that I might not have enough people because of its uniqueness. It might be one of those properties where you need to kind of wait for the quote right buyer who appreciates the type of energy that went into the type of trim and materials and the home automation and the extra master and all the other stuff. But clearly, it's the most overpriced home in the neighborhood.
Yeah. Well, sometimes you get it back. Sometimes you don't. And for a house like that, you want to put it on when it's a good market. When good market meaning a seller's market, because that's when people are feeling really optimistic and excited, and they just want to get it, and they're going to bid it up. In a tough market, no way. People are not so emotional. They're thinking with their brains, and they're like, "It's over improved. I'm not going to do it." So, and back to, so how do you price it? Do you go for that strategy of going low and having it get overbid, or do you price it exactly where you think it's going to go? And realizing, you don't always get it back, but a lot of it you're going to get back, even though it's maybe over-approved. Or do you just price it really high and wait it out? Waiting it out, just once again, it's going to devalue your property, because this wonderful, unique property is 3 months from now is not that. It's an over-improved dog, even though it's an amazing property.
Why does the market do that? I hear that a lot, that it gets stale and so it's been tainted, or I've heard all kinds of words used about listings that are old. Oh, they're unreasonable about the price they want.
Well,
Yeah.
you figure that's the reason why it hadn't sold.
Right.
If it's been sitting on for 6 months, you go, well, there's something wrong.
It's
Yeah.
a special property.
Right. Because pricing, right, it's always
We're
special.
all special.
Yeah, exactly. You're not special.
They're special, all right.
Well, I mean, and given that pricing properties is not a science, the real definition of fair market value, there's 3 ways to price property, but one is, fair market value, which is what a buyer's willing to pay.
Yeah.
So if a buyer's willing to pay X when it comes out the door, then it's worth that. But 3 months from now, a buyer hasn't been willing to pay it, so it must be overpriced. And that's the assumption. Nobody has to buy a house.
Exactly. So, Patti, before we cut you off. I'm cutting you off now. No. You've had some excellent points, and there's probably some people out there who are saying, what, I'd like to talk to this lady, especially since she's not going to hound me.
I won't hound them. No, I won't.
You're too successful to do that. How do people get a hold of you if you have these kind of questions?
Oh, that'd be great. Feel free to call me. I'm with Pacific Union. My phone number is 415-722-4842. And it's Patti Cohn, C-O-H-N.
Very good.
Yeah.
All right. We're going to cut to our last commercial break here. Again, talking James Bond themes here. This one's an easy one, okay? I have to give you one easy one. Who sang the theme song from the movie Live and Let Die? The first caller with the correct answer. And I see Mark shaking his head. He's got a big smile on his face on this one. The first caller with the correct answer is going to win a free 3-day, 2-night stay at the Lighthouse Resort. Again, subject to call singing fee. Call 888-912-1190. That's 888-912-1190 to answer this question. Who sang the theme song from the James Bond movie Live and Let Die? Don't touch that dial. You're listening to The Best of Investing with Edward Brown, Mark Hahn, and Patti Cohen. Don't touch that dial because we will be right back.
You
It was
realize
so
it's
fast.
a trick question because two bands sang it. It was re-released by Guns N' Roses.
Yeah.
Well, that doesn't
Live and
count.
let die.
I'm
I was
No, I
singing it in
can't
my
do that.
head, but I
Say
can't
from
remember
the-
who it was.
But
The
who sang-
original one, yeah.
Yeah, that's.
I'll be right back.
Okay. You'll be right back. So will The Best of Investing. So,
Gotta say
so
the
then
best.
how's business going then? I mean, it's
I mean, it's
still
just
good?
different. It's just different. I've been bringing on a lot of new listings, and some of them I thought would sell in a minute, and they don't. So now I'm getting some price reductions.
Yeah.
Yeah.
Well, you know that.
It's changing. Hate to say it.
And
I
now
hate to,
it's-
and I hate to actually report it,
I
like
know.
it perpetuates it. But it is what it is.
It
We don't have that much of an impact.
That's it. That's right. That's it.
It's a train. It's like a big yacht, and it takes a long time to turn.
I mean,
and,
that's the thing. I mean, it'd be nice if we just kind of not have reductions, but just have maybe it'll increase 5% instead of 15%.
Yeah, and it's I mean the rate of appreciation already has started going down a lot.
Yeah.
And I don't even know what he's talking about. All the major markets are back up or above the peak, and they're not. No, they aren't. And so I'm not sure where he's getting that, but also the rate of appreciation has stopped. And in some cases have gone down year to year, year over year. I mean, every single Tuesday I supply this data to the IJ.
Yeah.
And it's hot like it used to be.
Wow.
No.
Yeah, the thing about the San Antonio. So, as an example, I did this one house where I bought it for $65,000, put 10 into it, 75, sold it for 94, but $5,000 down, and I carried back the mortgage 10%. And eventually, the guy, it's a 30-year fully amortized loan, so I'm earning 10% of my money. And
Yeah.
literally, the guy sends me an email every single month. I made a deposit in your account. Can you verify?
Well, that's good.
Yeah.
Yeah.
Okay. You guys ready? Oh, so I can figure out how to set this up. Sorry about that.
That's true.
Oh, we have a decent second here. All right.
Excuse me.
Yeah.
How much?
14.
Oh, nice small one. Okay,
Yeah.
good.
All right. Away. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hahn and Patti Cohen. Third and final trivia question about James Bond themes. Who sang the theme song from the movie Live and Let Die?
Was he a Beatle?
He was.
Paul McCartney.
Paul McCartney.
I was going to say
wins.
that, but I
Yeah.
thought, really?
Oh, sure.
Yeah.
Yeah.
No, I'm
I always
singing
say that
it in
when
my
I'm
head.
So we would give
Yeah.
credit to either Paul McCartney or Wings. Just don't see the Beatles.
Guns N'
Right.
Roses also did it, but they weren't. It was
For the James, but it wasn't the James Bond thing.
That's
I mean, it wasn't the movie James Bond. Okay, so Mark, a sophisticated email comes in and says, "I am an experienced investor in investing in deeds of trust, but now I'm finding that my loans are getting paid off too quickly. What can I do?"
All right, so as president and broker of Pacific Private Money, the source of our capital for the real estate loans that we make here in the Bay Area are private individuals, and a number of private individuals have known about this investment strategy, investing in notes, or also called deeds of trust, because a deed of trust is the California name for basically a mortgage. There are legal differences between a mortgage and a deed of trust, but for all intents and purposes, they're essentially the same tool. It's a mechanism by way you secure a loan, so that way it's not an unsecured loan you made to a buddy of yours and that you're never going to see again, even though he promised you, I'll pay you 10% if you loan me some money. Here we make real estate loans, mostly short term, to people who have either a need for speed or they can't get bank financing, and we use private individual capital for that. And a lot of our investors have been doing it for a while. And if you've been investing in deeds of trust in California for any number of years, you've probably seen some trends in the marketplace. So, for example, 10 years ago when you were investing in notes secured by deeds of trust, more often than not, or most likely, it was a second as opposed to a first, because that was kind of the hot market. That's where most of the demand was for private capital, also called hard money loans, was a second on their home or a second on a property. And the reason why was usually they were in some form of financial distress and their bank wouldn't make the loan. And why not firsts? Well, because banks were pretty much in the business of making a loan to pretty near anybody back then. So a lot has changed in the last 10 years, and in fact, one of the big changes in lending has been the growth of what's really a well, I call it a new industry. It's not a new industry. It's the evolution. Hard money, kind of the way it used to be played out 10 years ago, 15 years ago, 20 years ago, really disappeared. It really went away, and it's been replaced by what most of us now call the private lending industry or the private money mortgage industry, and it's completely different. It's a metamorphosis from that. In fact, a lot of the big players like Pacific Private Money in Bay Area private lending are new since 2008. They are not. A lot of the companies did not survive the turn of the market that were making those loans because a lot of their loans, their loans went underwater. A lot of their investors lost money. A lot of them lost their licenses and went on to different jobs. So we have a new industry that is the private money lending industry. It's heavily regulated now. In fact, we're going through our second Bureau of Real Estate audit coming up, and this is something, again, this is a good thing because it keeps the bad players out of there. And a lot of bad players gave private money or hard money a bad name because of the way they lent, their predatory lending practices. We are not predatory lenders in any shape, form, or fashion at Pacific Private Money. We don't make predatory loans. We make loans to people who have a real a need for the money and a viable way to pay it back and the ability to make the monthly payments. And that's by law. The Dodd-Frank regulations passed those laws. So a number of things have changed. So we're not making as many seconds as we used to make. And we're not lending to people in, personal consumer financial distress, basically milking all the equity out of their home. Now that's really not the why we're in business today. The demand for our the demand for our loans today is generally short term. It's generally people who need to close quickly, or maybe they need a bridge loan to buy their next home. They don't want to sell their present home first. And bank loans and loans through your mortgage broker have become, as everybody knows, harder and harder to get. The pendulum has swung the other way. It's much harder to qualify for a bank loan, and they take longer. The average bank loan takes 45 days to close. Oftentimes, we come into play because maybe they've run out of time to close a contract. Maybe their conventional strategy went away for some reason. Maybe they have a glitch in their credit. So we come in. We're the plan B when plan A fails. But the people we're lending to, generally, they're in excellent financial shape, and they know they're going to qualify very shortly for a conventional loan to pay us off. So the types of loans that we at Pacific Private Money are making today versus 10 years ago, as well as many of the other companies who are making these types of loans, we generally see the demand for a loan that's going to be paid back well within a year. And that was not always the case. A lot of the loans that were made many, many years ago in our industry were basically to people who qualified, but really at the end of the day had no idea how they were going to pay it back. And some of those are still outstanding today. There are still people stuck in, quote, hard money loans paying 10, 11, 12% because they have no viable method to refinance out. They never repaired their credit, or they're just constitutionally incapable of having a good credit score, or they're just not bankable for any number of other reasons.
So what would, like this gentleman here, or lady, they can't tell who wrote it.
Right. So they're noticing that they're getting paid back quicker. So they're investing in individual notes, and individual notes, the higher quality individual notes in 2016 are short-term loans. That's just the fact. We don't make a lot of 2 and 3 year loans. We don't make any 5-year loans because, quite frankly, I'm not interested in tying up my investors' capital for that amount of time. I don't trust the market, and I don't trust the borrower to be able to look that far out and go, well, when everything gets better in my life and a bank agrees to lend me money, then I'll pay you back. No, I want to know that they're either going to sell the property I'm making them a loan on, or their mortgage broker tells me, Mark, I can absolutely, all I got to do is this and this, and they're going to qualify for an FHA refi or whatever.
So what would
I'm
you,
looking for the exit
what would
strategy.
you suggest to someone?
Well, here's the thing: either get used to it, or consider investing in a mortgage pool fund. At Pacific Private Money, we offer both types of mortgage-based investments. You can invest in an individual note, but guess what? You're probably going to get paid back anywhere from 3 to 12 months on average. Our average payback right now is about 8 months. Or you can invest in our fund, our mortgage pool fund. And there are pros and cons to investing in both. There are pros and cons to notes. There are pros and cons to funds. We don't have enough time in this show for me to go through that. But if for more information, definitely contact us at pacificprivatemoney.com. That's pacificprivatemoney.com. All our contact information, email addresses, local phone numbers, it's all there. And find out more information about the strategy of investing in mortgage-backed notes or mortgage pools. And one more thing I want to add. We talked at the beginning of the show, and I hope you didn't miss the first couple of segments, because we had some really interesting information about where we think potentially the market might be heading, that we might be seeing the top or the peak of real estate prices, and that was based on information that we're seeing in the tech industry in San Francisco and Silicon Valley. That it looks like there's a tech slowdown, which might be a slowdown in the rate of hiring, and may even result in layoffs if some of these unicorns don't pan out. I didn't want to leave anyone with the impression that that real estate is not a good investment strategy right now, or that lending on real estate is now more risky than ever. What you should always keep in mind is work with a company where the principals of that company actually know what's happening and are aware and up to speed in what's happening in real estate. Because the reason we lend at what we call conservative values, 70% loan to today's value or less, is because we are looking ahead. We are looking and expecting another downturn, another cycle. It's normal. It happens. It will always happen. It always has happened. We're looking forward to that next cycle, and so we want to make sure that we make loans that even if the market in the next 6 to 12 to 18 months does turn, that the borrower is not going to automatically fail in his strategy to repay us. So that's the other thing. And always keep in mind that real estate tends not to move that quickly in general. So if we're making loans that on average we're writing for 12 months and getting paid back between 6 and 9 months on average, we don't expect any downturn to impact residential real estate in such a fashion that we would ever be in danger of seeing one of our loans being underwater.
And how do people get a hold of you?
So again, it's pacificprivatemoney.com. That from there you can go to our funds website, which is at pacificmoneyfund.com. And again, not to get too confusing with the multiple websites, just go to pacificprivatemoney.com. Also, we just this week moved into our new office space. So we've got a beautiful former bank building. It's now the Pacific Private Money building in downtown Nevada. Lovely building. It was the Sonoma National Bank for 10 years prior to them getting bought out.
Until you bought them out.
Well, we didn't, but another big regional bank bought them out and then closed up the office. And I was successful in getting the owner of that building to give us a nice long-term lease on it. So we're really thrilled. It's beautiful. The tenant improvements, the contractor did a great job. It's nice, brand spanking new, 2,500 square foot interior. And come by and see us. We're at 1555 Grant Avenue. 1555 Grant Avenue. We'd love to have a chance to give you some information about mortgage investing that you can take with you. You could also, we're not ready for it yet, but we're going to be able to do little mini presentations in our conference room with our little PowerPoint presentation if you want more information on how you can earn 8% or more on your savings or IRA accounts. We have a lot of IRA account investors who have invested in the Pacific Money Fund. We are about to celebrate our 3-year anniversary next month, and we have been paying over 8% consistently, month in and month out. And we don't see that changing because the demand for our capital isn't changing, and there isn't any further downward pressure on our interest rates. We pretty much lend at 10%. If you don't like that, you can keep looking. But we're fast, friendly, and reliable. Never
And
left
honest.
any, and we don't leave our borrowers at the altar when we tell them that we can absolutely close next Friday. We absolutely close next Friday, and that's the business model we work in, and it's a great little niche market, and we have over 250 very happy clients who've been investing with us since 2000, many since 2008.
Very good. Patty, 30 seconds. Anything you want to tell us?
Well, it's a great time to sell your house. It
Yeah.
really is,
Oh,
especially
yeah.
if the market's turning. I mean, people,
Yeah, do it before
some
it
people
sells.
are
Yeah.
waiting. Anyway, call me, Patti Cohn, COHN, 415-722-4842.
Very good. Okay. We want to make a quick mention to our friends at Pacific Trade Exchange. Business to business barter. Check them out, pacifictradeexchange.com. Okay, so here's our thoughts for the day. Former baseball owner Bill Veck, you know, if you remember him, he was the guy who hired the little guy, Eddie Goodell.
Right.
He always had the ideas. He said, I am for dreamers. The only really important things in history have been started by the dreamers. They never know what can't be done. I thought that was pretty good.
I love it.
And Michael Jordan, we've all heard of him, he said, talent wins games, but teamwork and intelligence wins championships. Well, a guy who knows.
Love it.
All right, tune in next week to The Best of Investing. We're going to be giving away more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
Woohoo! Great. Wow.
Excellent. All right.
It's so funny that
It's
we're all
whack.
Pacific.
I
It's
know.
gotta be
Yeah,
confusing for
really.
people. Or maybe it's easy to
See,
remember.
well, it's because we're on the west